Hello there, welcome again. In this lecture, we will understand the preparation of the final accounts on the basis of the trial balance under the summarizing process of accounting cycle. In our previous video, we learnt about how to prepare the trial balance from all the debit and credit balances. So let's move ahead from where we have left. Here you can see the trial balance. This trial balance we have prepared using these balances. Yeah. So we have recorded these debit balances here and the credit balances under this head. So now let's use this trial balance to prepare the final accounts. So the final accounts of a firm, it consists of three accounts. First is your trading account, second is your profit and loss account, third is your balance sheet. So your trading account, it records all the direct expenses and the direct income of the business. And your profit and loss account, it records all the indirect expenses and indirect income of the business. Similarly, this balance sheet, it is a statement that records the balances of assets and liabilities account. So all these accounts, they are linked to each other. The balance we got from the trading account, it will be transferred to the profit and loss account, and any net profit or net loss that will be arising from the profit and loss account, it will be transferred to the balance sheet. So here we can see the trading account. So I have already told you this trading account, it records all the direct expenses and the direct income. So the direct expenses will be recorded on the debit side of the trading account, that is your purchases and wages. Similarly, your direct income, it will be recorded on the credit side. So here we have the sales of rupees 1 lakh here. So if we do the balancing of these accounts, then we get this 70,000 rupees. It will be shown as the gross profit. Yes, the balance will not be shown as balance CD or BD. It is generally shown as the gross profit or the gross loss. So if your credit side is greater than your debit side, or your income is greater than your direct expenses, then you will show this shortfall as the gross profit. This gross profit, it will be transferred to the P&L account. So let's move ahead. Here we have the profit and loss account. So I have already told you that all the indirect expenses and the indirect income, it will be recorded here. And moreover, the gross profit that we have got from the trading account, it will also be transferred here. Yes. And we have the indirect expenses, depreciation. And then again, if we do the balancing of these accounts, then we'll get the 60,000 as our balance. This will be known as the net profit. This net profit, it will be transferred to the balance sheet as it relates to the owner of the business. So here we have the balance sheet. The balance sheet is a statement that shows the balances of all the assets account and the liabilities account. So the balances of all the assets account will be recorded here and the liabilities account will be recorded here. So cash is a type of the asset, machinery is also a type of asset account. So we'll record the balances here. And for the capital account we have rupees 1 lakh, and the net profit that we have got from the profit and loss account, it will be added to the capital account. So your total capital comes to 1,60,000, and if we do the totaling of these sides, then we will get the 1,60,000. 1,000. So that's all for today. Thank you so much.